What's going on, everybody? Good morning and welcome back to Beat the Bell, presented by Kane Capital. Hope you guys are all having an awesome week thus far. So the market is sort of preparing itself for Jackson Hole this upcoming Thursday, Friday. And for those that were trading this event last year, you might have a little bit of PTSD from when the market sold hard. Not to say we'll get something similar this year, but it's interesting to watch. And we're certainly loading up along with NVIDIA earnings. The market also anticipating that. All right, let's talk markets, Jackson Hole, earnings, the whole 9 yards with today's panel, starting with Matt from Rocket Scooter. Matt, good morning.
Good morning. Thanks for having me.
All right, Stock Snipa, good morning to you.
Good morning. We got a sick Bet the Bell today. Let's get to it.
All right. Awesome stuff. So, unfortunately for the Fed forecast fans, Noah is on vacation, as we mentioned on Monday. Money Mander is not here this morning either, and so there's no Fed forecast. And I would attempt to give you guys the rundown, but I wouldn't do it any justice. So we're going to start with the system, and then we're going to move along with today's show. So quickly, let's look at some TA. And looking at the hourly chart, all right, this has really been the main focus and has made things pretty simple ever since we got the break below the 50 SMA, which served as support all through July. Now, I've mentioned that, especially on this higher time frame, the system doesn't always give you an actionable trade, but it is nice to check in every once in a while and take a look at it in order to help determine that short-term trend. And the short-term trend has been very, very clear. And that is that we are in a downtrend. And so we've gotten that regime shift where it is now sell the pops mode. And that is simply the case until we get the break back over the 50 and we see that momentum start to turn over. Now, again, it doesn't always provide an actionable trade setup. You still need to be plotting your support and resistances. You still need to be doing your own thing. But having a system that allows you to identify that broader market trend is extremely powerful. So for bulls looking for that continuation, or maybe asking why we haven't gotten that continuation despite some pretty nice setups that have begun to present themselves. And again, the market has sort of stalled this week, put in a short-term bottom as we anticipate NVIDIA and Jackson Hole. But the reason we haven't gotten that continuation is because we are still in a strong downtrend. And how does a downtrend end? With a reclaim of an important level of resistance. So in this case, using the moving averages, putting this in a vacuum, you would want to see a reclaim of the 50 SMA on the 1 hour chart. All right, so that's going to do it for the system this morning. Now I want to bring in Matt. Matt, the last time that you and I spoke, I wasn't here last week. From my understanding, things have changed a little bit in Rocket Scooter as far as positioning goes. Obviously, just very interested to get your take. Earlier in the year, you were of the belief that the market would, rally throughout the entirety of the summer. Obviously, we've gotten a pretty decent pullback here in August. So what has changed? What are things looking like? And what are your thoughts moving forward?
Absolutely. All the signs and positional data was extremely bullish. Remember at the end of last year, around October, we had called a bottom in the market. All the positional data had shifted and it was just bullish through the year. And as the year turned over and we ran into spring, I shifted my sentiment to say we're bullish until about October. I'm still kind of in that same boat similarly, but even though we've had a pullback, the pullback actually started whenever we did have the Fitch downgrade and a few other things that immediately changed the sentiment of everybody. I mean, that was a slap in the face the market needed. And within days, I kind of stopped with my aggressive bullishness. That was the event that made the market wake up. Now, for about the remainder of the expiration month in August, we saw that positional data just disintegrate. There was no bull support. There were no large positions, calls in the money, et cetera, to keep the delta positive on the market maker side. But now, ever since we kind of bottomed out and stalled out the last couple of days, positional data has started to show a bullish support from here through September again. So as of Monday, when we rolled into the new trading month, we start to see that there's bull support. And the way they analyze this in Rocket Scooter, we can do this with anything. We forecast where those positional risk areas are through between now and the end of time. As long as there's options, we can look at it. And the bottom of this dark gray area is showing a deeper bull pocket. So if you see right here, this sloping downward shows a strengthening bullishness from here, actually at this price. So it could show that this is a temporary bottom to reclaim that lost territory at least. But I've kind of lost my sentiment personally that we do continue to rally through October and onward. It looks like we kind of lose visibility of bull side beyond September's expiration. So we might get a September month where we crawl back up, but I'm not in this particular mindset of being bullish anywhere beyond probably double topping again from here until we get to this area and start to show a little bit more power. Now, one of the things to note is that the bear side, which is the lighter gray, the sloping down of the top of the bear side is showcasing bears exiting at this low. So obviously the pullback is a place where bears that have been upside down for a long period of time do actually get their opportunity to lock in some profit. And now it's going to be a race. Who do the new bears stepping in? Are they going to overcome the old bears stepping out? And that's kind of the fight we're going to see. And then if I pull up the Commitment Traders report, which looks at the futures positional risk, you can see a very interesting dynamic as well. The green line represents the long side of the market, asset managers, and they have been selling appropriately. There's been some bad news. They've been selling. But the blue line, which is leveraged funds that has a net contrarian short position, has been covering through from about July until now through that selling. So selling, buying. That liquidity is actually keeping the market from just collapsing on terrible news. There are shorts still waiting to get out for any dip they get, as these last 4 weeks have shown. The data is showing the blue is becoming less short. So there are shorts that can't get out of the way fast enough. And that's the thing we were forecasting to be the mechanism to push the market higher. Now, the only thing that'll come from that is that as long as the shorts are covering, you need another wave of buying. And it's hard to see that beyond what I showed in September in the option side. So in all honesty, this could very well be a top for the year. Or at least a top for the next month or so. And then we'll have to see just another wave of buying. And we know how this works is that anytime asset managers are buying and shorts are covering, it just creates a very, very, very powerful squeeze. When the blue line's pointing up and green line's pointing up, you can see the result of that. So this could just very well be one of those, dips before we move higher and lower, or this could just be a double top. I do not see this as being a collapse of the market. I think the bear side is a little hyper aggressive on that. And you can see that there are bears still waiting to get out of the way of this. So I think we're going to hold a really stable, solid market from here, unless the VIX starts climbing 25, 30 plus on futures. But we're probably going to stay inside of this 420, 460 range for a little bit.
Beautiful, Matt. Thank you for the analysis. Always super valuable. That's going to help us answer a couple of the questions that we have coming up with Stock Snipa on Bet the Bell, which we're going to move to right now. Take it away, Snipes.
Awesome. We got some awesome questions for you today, but you know how we always started off. We're going to take a look at the standings. We're going to see that Diamond is in the top at the moment, who is currently on vacation. I believe, I'm not supposed to talk about his whereabouts, but he's in Turks and Caicos. I'm just going to say it because it's pretty sick. But you can see he's tied with Hondo right now at 54 wins. Oh, wow. Same wins and same losses. Very interesting here. This could be Hondo's moment today.
It's my chance to get back in the lead with him not here. I got to take advantage.
This is an interesting day. So I'm going to go ahead and go towards our first question of the day. And I'm going to start it off with Hondo. Hondo, all the pressure's on right now. This is a big green or red. What do you got, green or red?
All right, I am going to go red today.
Red for the lead. Okay, Matt, what do you got, green or red?
Green today.
Oh, Hondo don't like that. Yeah, I'm gonna have to take green. Honestly, I feel like it's a toss up, but I'm gonna go with the green today. But yeah, I'm gonna transition towards our next question, which this is where stuff gets a little spicy. If you could go back in time and you can give yourself you can go back in time towards your first year of trading and you can tell yourself one piece of advice, one thing you can tell yourself, what would it be? Has to be in one sentence. I'm going to go ahead and start this one off with Hondo.
I would tell myself that one trade, one win, one loss is just completely irrelevant. I think a major step that I've taken in my trading and something that has really improved or helped me improve is just to stay focused on the fact that this is a very long-term game, and you're going to have those highs, you're going to have those lows, but the trader who can kind of remain steady through it all is the trader that's going to be successful. And early in my trading career, I would feel like a genius when I was trading really well, and really, really beat myself up during the times when I was going through a drawdown. But it's super important to just remain even keel and disciplined, and just trust your system, and then trust you're making the necessary improvements to better yourself.
I like it. All right, Matt, you got a time machine. You're back in time. Your first week of trading. What advice are you going to give yourself?
I would tell myself to not be afraid to say no to things, to say no to a bad trade, say no to something somebody's selling, an education, a course, to say no to certain things in textbooks. Everything that's out there is, a lot of it is science, a lot of it's math, a lot of it's somebody's opinion. And it's really hard to find good things to learn from. And a lot of times traders get, especially myself, you get on one path and you're committed to it and learning, and you're like, well, someone else said this, so it might be right. And then you're takes you longer assuming that everything out there is right and correct, and thinking that somebody has all the answers, and just saying no to all of that and saying, you know what, I can find my own way. I'll find my own way. Trust yourself to make decisions that are just as good as anyone else. So be your own authority and your own education, and drive. Say no to the massive amount of things that are out there.
I like it. I like it a lot. If I could go back in time and give myself one quote or one piece of advice or one little information, it would be a quote by Dan Bilzerian, actually, and it would be, "Don't be a sucker." Honestly, I start to think about it, and I want to tell myself a quote by stock Snipa, and it would be, "Don't fuck up." But one of those two things is what I would tell myself if I could go back in time to my first week of trading. So I'm going to go ahead and jump towards our next question. And Matt kind of did break down on this a little bit during his segment, but I mean, he didn't really break down on this too much during his segment, but a lot of the stuff he was talking about does refer towards this question. But my question is, will SPY hold 400 for the rest of this year? Will we see us enter that threes, or will we stay over the fours? I'm going to go ahead and start this one off with Matt.
As of right now, I think so. I think it's very possible. Like I said, there is enough. We saw this in COVID. There were enough people short that, despite announcement of quantitative tightening, which is really bad, and rate hikes and inflation, the short covering was powerful enough to rally the market 6 months after Jay Powell announced quantitative tightening was coming down the road. Do not ever underestimate the power of short squeeze. And right now, we're seeing this first dip that we saw on what we can always call the Fitch slap or whatever, that particular day, and that news event pulled the market down. You can see in the commitment traders, there are shorts ready to get out of the way. So despite bad news and incoming possible downside, there's enough people out there who've been upside down for an entire year that just can't hold on anymore, and they're getting out. So I think that short squeeze is what's keeping the market floating. And it's going to take some really, really bad news or bubbles popping or bad earnings to kick the market lower. And we're pretty much through earnings season now. So at least we need another quarter to see. So I think we're going to stay pretty healthily above that level, probably for the rest of the year.
I like it. Hondo, what do you got? SPY above 400 for the rest of the year?
Yeah, I think so. Right now, things are tricky. The reason being, we lost the major uptrend that we were in going back to March. And so we were trading this really nice channel, and we lost that support last week. And so that's why we've seen, this period of selling to start August. And so that strength that everybody got so used to trading or so used to seeing is, for the short term, gone. But something that's important to note, we did get the golden cross back in February, and no bull market has ended post bear market after the golden cross without first making a new high. And so I think that we will, at the very least, make a new high in the S&P. And I do think that in the short term, 400 should be a nice floor for us. So short term right now, things look pretty gross. We're no longer in that, buy the dip mode, and anything could happen and make adjustments as necessary. But I do think that we'll still continue to have a strong end into the year.
I like it. Yeah, I'm gonna have to say I think that we do hold 400. I think that 438 where we're sitting at, 438.53 precisely at this very minute. But I think this mid 430 range will not be the lows that we see for the year. But I do believe that we will see that short squeeze possibly or a bounce. But I'm gonna have to go ahead and take over on this one. So I'm going to transition into my next and final question, which I personally think that this is the most important one and one of the most interesting questions I've ever asked on Bet the Bell. I'm going to go ahead and start this one off with Hondo. But in your opinion, what is the price to retire? Now, keep in mind, I'm not talking the price to have Lamborghinis, super mansions, mega yachts. No, I'm talking about the price to never work again work a day in the rest of your life. If you had to put a number on that, what would you put it at, Hondo?
So is that, at my current age or at retirement age?
At your current age.
Oh, fuck. I mean, I would need a lot of money. I would need a lot of money. I don't know, maybe in the range of $10 to $15 million. I was thinking, so I was prepared to answer this question based on, at retirement age. So I'm just I'll take it as that. I would need at least to feel comfortable, $5 to $7 million in the bank by the time I retire, and that's under the assumption of that'll give me $200,000 to $300,000 a year, which $200,000 by the time I retire is going to be nothing. I feel like. So that's even conservative to say to feel comfortable to retire, I would need at least $5 million. It's pretty intimidating and pretty fucking scary to think about, but it is what it is. And luckily, compound interest is on our side. So it really shouldn't be too much of a problem as long as we're smart investing early here. So.
Yeah, I mean, dude, by the time we get to retirement age, the dollar might start to be looking like the yen, and McDonald's workers might be making six figures for all I know. But who knows what's going to happen by then. But yeah, I like your answers, especially that you considered inflation in there. But I'm going to go ahead and ask Matt the same question now. What is the price to retire?
If I think about it, like did a little math. So if a good salary, $150,000 a year is enough to maintain a standard of living. And of course, your standard of living will obviously be lower when you're older. You're not buying as much new things. And so say that you have $150,000 a year, that's $1.5 million a decade. And from the age 60, if you plan to live to, 100 years, 30, 40 years there, you need at least $6 million to last 40 years plus 1.5 for every decade you have. Since I'm far from 60s right now, I would say that I'd at least need about 9 million or more to comfortably live on a similar salary to that base that I set. So that would be my target, to just quit now and know that I've got enough money to buy Chick-fil-A when I'm 99 years old.
I like it, dude. I like it. Chick-fil-A at 99. Yeah, I'm gonna go ahead and say I would probably say, there has been like research put into this question, and they say that at retirement age, $5 million will be sufficient. But I'm gonna have to go ahead and say that I think it probably would be a bit higher, especially by the time I reach there. I got some time to go to get to that age. But if I was to retire today, I would say that I need probably about $12 million, I would assume. And if I was to retire at retirement age, I would say I need about $7 million. And that's no Lambos. I will be sad and depressed that I don't have a Lambo or a super yacht or any of the cool stuff that I do want. But just like Matt said, I will have Chick-fil-A at 99. That'll wrap it up for Bet the Bell today. I'm going to go ahead and pass it back to Hondo.
All right, guys, that's going to do it for this morning show. Appreciate everybody who tuned in. Appreciate you guys in the chat as well. Thanks for joining us. We'll be trading live all day today in the King Capital Discord. As always, you guys can go to king-capital.com or scan the QR code that should be popping up shortly on the screen. Thanks to Matt for joining us. Always quality when he comes on the show. We'll catch you guys back here on Friday morning at 8:30 a.m. Eastern time. Have a good one, everybody.